Welcome to Align Trading, going over the weekly recap. Before you look at the charts, I want to mention a couple of things. The interest rates, the consensus now is that the rates might not be lowered as quickly as before. There is less cuts expected this year now, which could be bearish in the long term, but I wouldn't be so bearish this week, especially with the Iran-Israel conflict. We had the sell-off from that, as you can see right here at 519 down to 509. If you're entering down here now, you are potentially chasing. Now that could change, say if nukes are involved or stuff later on in the week that we have to wait and see. But as of now, I would not Monday morning opening bell be looking for puts. I would expect to see a bounce or maybe a fake lower, a little head fake lower, and then a bounce back up to form this inverse cup and handle that we have here, possibly forming another resistance up at these levels here before we eventually do break down. So here's the news for Monday, and then on Tuesday, Jerome Powell is actually speaking. So that could be a market mover depending on what he says. Pay attention to that this week. Also, what played a part in this sell-off on Friday was bank earnings. We had a couple of big banks like JP Morgan reporting earnings, and they didn't do as well as many would like. Therefore, we had a little bit of sell-off in the banking sector, and with the Israel thing, we got the sell-off on the S&P. So that is more reason to let it bounce, let the structure form again, wait till we have more confirmation. We're going to go down. There's really no rush. I would like to see something like this maybe form right here with a tapering algorithm if we were to be super bearish and a lot of downside was coming. We also would need to stay within this orange selling channel that we have here. As you can see, whenever the selling comes in, we are confined within this orange. So unless we stay within the orange, or say we broke out of the orange, even steeper selling algorithm down, that is what I would have to see. Until then, I'm not going to be chasing it to the downside until further confirmation. What you have to understand here is we are still in this blue controlled selling algorithm, as you can see. So if we form an inverse head and shoulder like this with liquidity here and break out, we could see something like that with all of the liquidity. We get this and we're already back in a squeeze just like that. This is kind of what has been going on every single time you think it's breaking down. Right here towards the bottom, what did we get? We got the move up, flag, these two algorithms working together, and the same way up, the same two algorithms, and we continue. If we go any lower, I would like to see this as my first level for a bounce at 508.45, and then if we were to go even lower, this 504.81 is a very strong support as well, and we could see a bounce from there. But I would like to see where we're at now, maybe start to form some sort of head like that, and we have this and this, and see if we can continue higher, closing this cup right here, see this algorithm, and then we can get the move higher, and so on. All you have to do is let the algorithms guide you here. If it starts breaking out of this yellow, starts breaking out of the blue, starts breaking out of the orange algorithm, then maybe we see steeper, more aggressive selling, and all of this liquidity to the upside, we don't visit it yet. We have a pullback. But if we do stay confined within these and we start building what we have continued to build like this, pay attention, because this would be the perfect time for them to set a trap and squeeze higher when everyone is short. Everyone who missed out up here now wants to get in at the bottom, and that is when they cause a problem. Something very important to be watching is the daily chart and the Bollinger Bands. As you can see, we have now got that bottom Bollinger Band test. So we need to watch and see if the 5-day stays crossed below the 20-day here, and we see more downtrend. This bottom Bollinger starts to open up. The 5-day trends lower. We retest the 5-day. Again, go test the bottom Bollinger, just as we did on the way up. Test the 5-day, upper Bollinger, 5-day, upper Bollinger, and so on. This is what you will see with the downtrend. If we start downtrending, but we could also have a fake cross below here and a squeeze, and we're just back on top of the moving averages. We form support above them, and then we retest the upper Bollinger Band once again, as we have done the whole way up. When it looks like it is going to go down, we make our way back to the top with a mighty squeeze. So pay attention to that. Should be good volatility this week. Do not be chasing positions. Logically, why would you enter a new short position at the bottom Bollinger Band? At least wait till we retest the 5-day, because we will, even if we do have a major sell-off, when we retest the 5-day moving average and hold below it, form resistance, then you can look to enter your short position. You cannot look to enter your short position at the bottom Bollinger until we retest this 5-day, even 20 possibly, and establish we are going to go down again. Trade safe this week, and I will see you guys Monday. Thank you for watching.